really. Dimantha, now it looks like there's consensus. We are a little surprised at how quickly things turned around from where we were in January. What's the outlook for equity as an asset class from where you are looking like?
Yeah. Thanks, Shamindra, for having me today. So, if you really look at it in terms of GDP, so this year we were looking at a negative GDP growth of around minus 3 to 4%. However, if you break up that GDP growth, as which Vajrapani pointed out, yes, private consumption has significantly crashed, and that is one of the key reasons why we are having negative GDP, and so 11.8% in the first quarter negative. So now what we are looking at from here on is if you take the second quarter, we think things have sort of bottomed out there, which is the June quarter. So from there on, what we are mostly looking at is a recovery story, and the IMF timeline, or the government's timeline in terms of the debt restructuring, is happening broadly on track. So we were expecting somewhat of delays, more negotiations to take place, but then not to be so. So they are sort of moving at a fast-paced track. Inflation is falling faster than anticipated. So at least a couple of 200-300 basis points below our expectations. So with that, all positive news coming up, we've also seen the interest rates crash significantly. So with that, overall, now we were looking at the GDP recovering towards the second half of the year, right? And positive GDP growth to mostly come towards the fourth quarter. And with that, we were looking at some kind of an improvement in corporate earnings as well. So obviously, with interest rates coming down, you will see finance cost and consumer side recovering. So with that, there is a improvement in investor sentiment likely to happen, and which is already happening, and that is pushing the equity market up. And so we were anyway looking at, with this recovery story, a positive returns for the equity market towards the second half of the year. And with the reform story and the government's or the economic recovery story happening, and subject to that, we think the equity returns being positive, that can continue for a further year as well.
Right.